AMC, if you were to have caught the live stream last night, you would have known that we were talking about the retracement that we faced today before it happened. Okay, so let's go ahead and verify what could be happening for the following sessions with AMC. What is up, you guys? Thank you so much for stopping by once again on this Taco Tuesday. This is ARCa coming at you with an AMC technicals and raw price action thread of analysis combined with some statistics. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so guys, yesterday somebody asked a question in the live stream asking me to see if I can evaluate the very short-term time frame to see what the expectations are for the next day. So in that question, I actually did answer particular to this large candle here. I told him that I was able to provide two areas of support since the downside was a little bit likely for us to look at. My lowest support was $6.15. Okay, you guys, so let's go ahead and take a look at the charts now and see what it looks like. Okay, so here's that support that I actually provided, and we actually did succeed that support, and we're well within it now, within that range, right? So what is the price action saying though? Are we moving to the upside? Are we moving to the downside? What could it be? Okay, first of all, our momentum indicators are not flashed to the downside. We're still suggesting a little bit of an upside continuation. I still see the bullishness from the 3-day exponential and the 14-day simple within the stochastic momentum indicators. Okay, so this is still looking pretty good. We definitely want these both of these indicators to be pivoted towards the upside. We don't want them facing down. It could be a temporary pullback, right? But we're in that pullback now, and it's still suggesting the upside. The good thing here is that the moving average is still pivoted towards the upside, which essentially means that the firing of the signal is still valid. And our upside thrust of 44.69% based on a volatility versus momentum profile backtest throughout the entire trading history of AMC on the daily chart. That is just zooming out so that you can see all of my notes, right? So it's still on. That percentage move to the upside is still on, which would essentially take us right within the area of about $9.14, $9.15 maybe. So, which is very confluent with the 2.618 golden mean located at about $9.25. Okay, you guys. So my overall resistance for the shorter term, talking about a week, maybe 2 weeks, depending on how we move as a community, could be between $9.82 to about $9.15, statistically and discretionarily speaking. Okay, so let's go ahead and move on to the next chart and see what we have. This is something that I wanted to talk to you about today in particular. Okay, so you can see a broader scale here. This is a broadening descending wedge that we're looking at on the 5-day chart, and you can see that before we made that January run to the upside, which it was known as the $21 or $25 run, right? We actually were breaking out in a very healthy manner from also a broadening descending wedge within this large formation here. Okay, so let's go ahead and just look at the details here. So we have test number 1 of the resistance, 2, 3, and we have that test number 4 and true breakout, just like it always happens. Okay, test number 4 is usually that confirmation test. We make the upside, we meet the price objective, which was at in this case, you know, post split was $10.07. But please know that this was, I think, $15. I'm not sure where it was, right? But yeah, so we actually met that target. We resisted from the target and actually came back down to validate our newly converted resistance into support before a continuation onto the upside. Okay, so what you're looking at presently is a buy formation. Okay, so the buy formation here is very similar to what happened before, except that this time we're breaking out on test number 5. And why test number 5? Well, that's because we're in a smaller scale. This could broadening descending wedge. So this could actually be seen a little bit better probably in the daily chart. There you go. So what we're looking at here is a true breakout test out of this broadening descending wedge on test number 4. Okay, so we have 1, 2, we have test number 3, we come back down, right? And then we break out on test number 4. We need to come back down and validate our newly converted resistance into support. And what are we doing here? we came right back down to that same. I mean, look at the accuracy on that, okay? So what I'm looking at, what I'm telling you here is that we are looking at these formations as a community. So whoever is trading this, the whales, the institutions, they see the psychological component known as the broadening descending wedge and the typical trading rules. I'm talking about typical rules here, okay? Playbook rules. We need to break out of this channel. We need to come back and validate the newly converted resistance into support before a continuation to the upside. I did compare this to CEOS just yesterday. Let's go ahead and touch down on that one more time. Please notice here that it can happen like this too, okay? This is the 4-hour chart though, okay? We're not looking at a daily, so the daily is actually even more credible. So please notice that we actually broke out of the channel, right? We came all the way back down and started validating, and then we started to make that ascent before actually making the true take profit zone located at the genesis of the formation, okay? So I'm not sure why my lines are a little bit moved, but the genesis of the formation is actually right there. There we go. There we go. And you can see here that the target met very much at it, and then we came back and retraced to reaccumulate before a continuation to the upside. This is essentially what I'm looking for AMC, okay, you guys? So I just wanted to make sure to touch on those details real quick before we can continue. A very important thing to notice here, okay, that could be suggesting for us to maybe, and this is not a certainty, okay, we're gonna validate this with momentum in just a minute, but please notice that we do have a psychological component here known as a gap, okay? So this gap can usually be used as a form of support before a continuation onto the upside. It does not mean that we have to fill it. It's a fallacy if you're thinking that we need to fill the gap if we're there. That is not true. We do not have to. Gaps can go on and unfilled for the rest of their lives forever. We don't actually ever have to come back, okay? So in this case, there are two potentials, of course. Since we're so close to this gap, we may actually come back down and touch that 594, right? Before actually continuing on to the upside. Or if the sentiment feels like it, then we'll touch that 580 and fill the gap and then continue on to the upside. Okay, so what I'm basically saying here is that the downside could be a little imminent, actually because of this formation here. When you are looking at a red candle engulfing the green candle right before it, this is called a bearish engulfing candle formation, okay? So this candle formation does present a little bearishness. There is no price objective for this. It is just known that if this happens, then typical trading rules suggest a downside incoming, okay? So that's why I'm suggesting the potential of touching 593 to 580 zone before a continuation, okay, you guys? So let's go ahead and now move on to the last part of the analysis, which is actually the RSI. But I would like to actually touch down on what our, let's see. Yeah, let's go ahead and actually just touch on the RSI first, okay, you guys? So the 30-minute immediate short-term time frame, just like we always do in this channel, is suggesting an immediate upside. Please remember that the 30-minute time frames do live out pretty fast, and they actually do not have to stick around for too long. Just know that these are immediate short terms, okay? So upside in the immediate short term, we look like we have a little bit of a consolidation period here on the buy hourly. And let's see the 6 hour. The 6 hour is still suggesting a little bit of consolidation as well, but I would like for you to take a look at the position of your RSI signal represented by the purple line. Remember that your pink line is your 14-day simple moving average, okay? So as we get closer to this gravitational zone of the bull weakness percentile, then we are likely to get gravitationally pulled right into the following zone known as the bull strength percentile, okay? So let's move on to the 12-hour chart and see what we have. 12-hour chart is in a bit of a precarious situation here, but the good thing is that it's well within that gravitational zone of the bull weakness percentile, suggesting a pull right back into the next zone yet again. Okay, that's not confirmed just yet. First of all, I don't like these tiny pivots because they tend to fail a lot, okay? So let's look at the daily. Actually, were we on the daily just there? That was a 12-hour. Let's see the daily, okay? So the daily is suggesting a limited downside, okay? So that limited downside is in respects to that 14-day simple moving average, which, by the way, correlates with what we're talking about. The potential of us coming right back down to about the 594 or 580 zone before finding that upside continuation. Okay, you guys? So this is what the daily is suggesting. Very little downside to go. If we jump straight into the 5-day time frame, you can actually see that the pivot towards the upside is very much still on, and the upside continuation absolutely is in play. Okay, you guys? So I am seeing some limited downside, a little bit of consolidation for the next trading day while we load up some more bulls into the play before continuing on to the upside. Okay, so things are still looking pretty bullish for the AMC ticker. Okay, if you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. You will find those links in the description below. Okay, you guys? And also, if you would like to chart like me, if you would like to join me and create these drawings alongside me, right? Please go ahead and refer to the link, the affiliate link for TradingView software in the description below, as you will be able to use that affiliate link and sign up for either a free account or whatever type of subscription account that you would like. Okay, you guys, please know that I am also offering the Crypstex ARC-Series indicators, similar to the one that we've been looking at right over here, you guys. And this is volatility versus momentum, which is how I run my back tests like this. Okay, so we have condensed volatility and momentum in one indicator known as the enhanced MACD, which is one of 8 incredible indicators included in the subscription packages. Okay, so if you are interested in acquiring these indicators, please reach out to me and we'll go over the subscription packages and we'll get you situated with indicators that do have bull and bear signals. Okay, so with that said, you guys, I wish you well. A very good night. Oh, one more. I know that a lot of people asking me this question. Okay, I am assuming the price action on pre-split. Okay, so which by the way, it should be valuated the same. Okay, so what I mean by the same is because when we actually first had our initial split, it was actually a 1-for-1 split. So if you had an initial 100 shares, then that 100 shares turned into 200 shares, which were literally split half and half. So you had the valuation of your one half of your investment on APE and your other half of the investment on AMC. Of course, they were supposed to run in tandem, but of course they got separated, and it's really interesting how now all of a sudden they're running in tandem. Okay, so the price action that I gave you and the date that I gave you is not by any means the reality here. And I also did mention that I do not practice fractal analysis. I mentioned that this was a time fractal and that I do not like to practice time fractals whatsoever. It's only in an assumption, okay? But with sentiment and with psychology, this thing could rocket ship at any moment and invalidate the time fractal theory. Okay, so even in price fractal, I don't really practice fractals whatsoever. The only type of fractal analysis that I will practice is the formation fractal. Okay, so even in that situation, those are actually repeated iterations, not fractals. Okay, you guys. So it's very important for me to express it to you that way. I am not going to take the price action compared from this run up or this run up and apply it to this, because it's not the same. Okay, so it's not the same. We are looking at similar breakouts from similar formations that tend to have a good hit rate within a bear market cycle. We do not trade a bear market cycle like we do a bull market cycle. Okay, so this was in respects to whatever was happening fundamentally with the company. Then we moved on to the upside based on psychological or whatever other means happened. Okay, what's happening right now is not the same as what happened before. Okay, you guys, please know that I'm actually not going to be practicing fractal theory with you whatsoever. I am going to show you mathematical probabilities based on back tests and based on tangible data, not on assumptions. Okay, you guys, this is how I trade. This is how I do it. No disrespect to anybody else, how they practice their trades. More power to them. Okay, you guys, but I tend to look at validations with mathematical models. If the numbers validate it, then I will go with it. If the data says it, I will go with it, not by what someone else says. Okay, you guys, numbers don't lie, people do. With that said, I wish you a very good night, and I will catch you at the bell mañana. Adios, guys.